The hot topic of late, guys, continues to be the R word, as we like to call it. The recession fears continue to linger in the background, causing a bit of a negative tone overall, or more of a negative tone for the overall market. We're going to talk about psychology here specifically, because in a downturn, in a negative market, it can be very stressful dealing with the negativity on a daily basis, both if you are a short-term trader and obviously, yeah, don't look at your investment accounts right now. So a few tips here. We'll do our best to give you a few tips on how we can deal with negative psychology during a recession.
During a recession and during a market pullback, one of the things people always get concerned of is like, I want to be invested in the long term. What am I going to do? Like, how do I get in? When do I get in? What am I supposed to do about it? Picking bottoms is impossible. So avoid FOMO. One thing, like I'm just going to use Upstart because it happened to make a move today at down 10%, and it's on my quote board today, but it exemplifies this point. Upstart back in May made this move where it held after a huge capitulation, got cut from $90 to $30 in 3 trading sessions. And then you essentially doubled up in a matter of weeks. Now, anybody looking at this traditionally saying, oh my goodness, when this reclaimed $30, you could have just made 80% in a week and a half. It's a huge kind of upside potential there. And it's so easy as this is happening to get FOMO and say, I've just missed a tremendous opportunity at the bottom. And what you need to understand is, for a lot of these names, when you do the job of zooming out, making a 10, 15, 30%, 50% retracement from a wipeout low, 100% doubling up, when a stock has given up 90%, the math, it's just easy for that to happen. I know that sounds crazy, but it's not even a blip on the daily chart. So when everyone's thinking that's FOMO, it hasn't even broken the trend at that point. Breaking the trend on this stock will be over 100% from the bottom. That's the reality. That's when you'll be able to say that this thing has broken that downward trend. It's above the 50-period moving average. It's got some bullish sentiment to it, and you're not trying to pick a bottom. You're expressing yourself into an upward move. And that's what you got to understand here. You will have to sit through some massive upward wins for you to avoid that whole FOMO of just trying to catch these bottoms. That's just part of the course. So unless you're dollar cost averaging in, you're not going to get that low. At some point when you get the turn, it'll be buying a stock that you'll look at and it's like, but it's already up 80%, or it's already up 50%. That is a reality, so you got to avoid that FOMO in this market.
All right, what's my plan? And that's my tip, is like, have a plan on what you're trying to do. Like, you can't just buy every single dip, right? So let's just say that you are dollar cost averaging. I think that's the best thing to do in this market. You don't want to push all in because something's at a key level, right? Dollar cost average, and I'm going to use AMD as an example. Like AMD, a huge runner, right? Obviously, you missed the top, no doubt about that. I don't think anybody got out at 160 or anything like that off of a huge move, right? But as it's coming back in, try to look and find out some key levels on where you want to buy. Like on the way down, why were you buying here at 132? You know, there's really nothing. There's no levels here that show anything of that. Sure, it bounced there back up to 156, but then when you're buying 132s here, look what happens. Drops all the way down to 100 before it even comes back to 132. If you're sort of already identifying that, hey man, this market maybe is a little bit weak, well then that's what we want to make sure that we identify, right? It's a weak market. So you don't need to be that person that is in here buying every single one of these dips. Just do some work. Like if you like 85 here, I can't blame you. There's a level right there. But where's your next? That doesn't mean you start buying 80s or anything like that. Drip down and see here. Here's 72 as another level, right? Will it get there? I don't know. But hey, you can miss a bottom. That's okay to do that. You know, so that's part of it. It goes with Neil's trading there. It's like, you can't, if you like AMD, which I do, that's fine. But don't like buy every single level on the way down. I mean, we can even go more. I mean, it's going to drip down more. But like, look how good this 75 looks. 75, 75, 75, 75. So if you're in a market right now, then stop buying 100s and stop buying 88s. Easier said than done when you look back at this trade, because you say, oh, well, you know, how did anybody know to do that or whatever, right? But to be honest with you, you know, that's how people trade. You got to sort of dollar cost average, but be smart about it. Pick key levels. So psychologically, you won't, you know, allow you to sleep a little bit better at night, because at least if it comes down, you have some waiting bids at some levels that you believe are key. So opposite kind of a FOMO, plan your trade. If it gets to it, take the fill. So that's sort of how I would deal with that.
I love that concept, and I'll extend on that, or I guess expand on that a little bit with my idea as well, and that is simply confidence, guys. And confidence comes from understanding what works for you, and the best way to do that is to keep track of what you're doing. And with records, you'll understand what is profitable for you and what is not profitable for you. Understand big picture in the case of this year is very, very key as well. Things have changed. Things that were working over the past 5, 6, 7, heck, 10 years are no longer working in this environment. That doesn't mean there aren't unlimited opportunities on a daily basis that we show you on this very show. So understand that the market has changed. That doesn't mean there aren't opportunities for you. You simply have to understand what it is that works for you. Keep very, very, very clear records, guys. Great tips for how to stay calm, I guess, during a recession.